TJ the Wheel Deal coming at you live. It is Tuesday, 11:45 a.m. It's Taco Tuesday. So what did I do on Taco Tuesday? I ate a ramen noodle. I ate a ramen noodle. I think the ramen noodle was in line with the thumbnail. We had a goal to get the big count to 20 million, and I feel like we're on the path to zero right now with these bad trades I keep getting into, man. I just don't understand how I have something that works like SoFi. I got something that works like Enphase. I got something that works like even PayPal, the Amazon backstop trade. But I find myself struggling with trades that aren't working, that aren't working. And I put a lot of energy, a lot of time, a lot of effort, a lot of money, a lot of mind capital. And I'm just like, where would I be if I just focused on the things that worked? I don't know. I'm sure I'm not the only one. I'm sure I'm not the only one that feels that way. What's going on, Gretch? What's going on, Manish? What's going on, Angel? Hope you guys are doing well. Let's get into it. Let's get into it, guys. First things first, 1 minute with God. I've already recorded this for X, so I'll just read it to you guys here. So it's righteousness. How can I be righteous when I'm in the middle of a battle? As a believer, you have been made righteous in God's eyes because Jesus forgave your sin when you confessed it to him. You may be tempted to think that you're not good enough, but God looks at you as though you have no sin. He sees all the abilities and gifts he created in you. You can confidently stand your ground against temptation and evil because you know that God is fighting for you. When you're equipped with the armor of God and God is at your side, Satan cannot defeat you. God's response: stand your ground, putting on the body armor of God's righteousness, Ephesians 6:14. We are made right in God's sight when we trust in Jesus Christ to take away our sins. All we can, and we all can be saved in this same way, no matter who we are and what we have done. Romans 3:22, God's challenge. I no longer count on my own goodness or my ability to obey God's law, but I trust Christ to save me. For God's way is making us right with himself. For God's way of making us right with himself depends on faith. Philippians 3:9, I believe. Good stuff, man. Good stuff. I think it's hard, right? Because I was saved when I was 17. And I had this idea, like, whenever I decided that it just made all the sense in the world to me that I wasn't going to be able to live a perfect life, that I had to count on Jesus to carry the burden, if you will, the cross for my sins, to atone for my sins. It was real hard because I think the biggest thing that I dealt with and I deal with to this day is hypocrisy. It's like you never feel worthy, right? You never feel worthy of his amazing grace. And that is something that I think that every believer struggles with, or even non believer for that matter. I feel like, how could I be worthy of such an amazing gift? But I think that, as you go through life, you just start accepting that the reason that God sent Jesus down is to show you that a perfect life can be lived without sin, but you're not going to be able to do it on your own. So you have to lean on him. And I think that that's why you have to ask for help in a lot of aspects of life. You have to ask for help. And that's hard for me. Like, to ask for help is generally hard for me because I like to try to figure out things on my own. In fact, I often resent people that try to help me. It's kind of weird. It's kind of weird. Anyway, those are my personal struggles. Comment in the chat for you guys. What are your personal struggles with that kind of stuff? It's so we do on this channel, right? 1 minute with God, we get deep. Now let's get into the portfolio. At the end of the day, this is a finance channel, but I like to talk about God and finance. Why? Because finance is mentioned more than almost anything else in the Bible. I don't think that's coincidence. So let me see if I can figure this out. Share the screen. We'll go here, share with volume. Let's see what's going on with the portfolios. I've been busy this morning, had to meet with the family. I'm just waiting on the TV to show that we are on the right page. We are. Awesome. So let's get into it. So, again, the very first thing that I look at every day when I log on is portfolio loss for the day. So, collectively, between all the portfolios, we're down 171,000. So, that's a pretty flat day. That is a pretty flat day. I think I saw earlier that the markets were up. I think the Dow might have been down. Yeah, so the Dow is down quite a bit. The S&P and NASDAQ are down. The Russell's down a little bit. Crude's up. Gold and silver are down a little bit. The euro, the dollar, all that stuff's pretty flat, I would say. Bitcoin's down yet again. So I think I want to start there. What's going on with crypto? Guys, I just don't think crypto is going to move right now until we have some resolution with the Clarity Act. I don't like to play politics on the channel, but politics is a real big part of the stock market. It just is. Nothing moves the needle like politics and news. Nothing moves the needle like politics and news. So you have to be pretty aware with what's going on, right? You got to keep up with current events. I don't like looking at the trash, like all the crap that's going on with Minnesota. I think it's an absolute shit show. It's a travesty. Regardless of what side of the political fence you're on, I think we can all agree that we should value a human life above all things. I think, to me, that's just that's like the common denominator of human decency. And I feel like we're losing that as a country and as a world. And it's really, really saddening, man. It's really, really saddening. So you have to be aware of all of those things because they do have a material impact on the stock market, especially when it comes to legislation, right? Like, who's on the right, who's on the left, what are they going for, what are they not, what are they opposed to, etc. You got to become aware of that type of infighting to a certain degree. You don't want it to consume you, but you have to be aware, because then now you got to look at your portfolio, because those are the macros. Your portfolio is the micros for you. And you have to be like, how is who in charge? Like, depending on who's in charge, how does it have a material impact on my stocks? And I didn't really start piecing together that movie, guys, till about 2 years ago. Because I was like, man, I don't care. Republicans, Democrats, I'm a Texan, I'm an American, I'm a human. Don't come at me with all that political crap, right? That was me. That's always been me on a personal level. I have a disdain for politics. Like, I don't like it. I think it brings out the worst in people. I think it's horrible. I think y'all all know how I feel about the two-party system. I think that has just divided this country like nothing else. Democrats think they're right. Republicans think they're right. I think they're both wrong. And but it has an impact on our portfolio. So I always look at, okay, how is, we're featuring this account right now. How is SoFi impacted by what's going on in Congress? What all the infighting in government. How's PayPal materially impacted? How's CleanSpark materially impacted? How's Palantir, MicroStrategy, BM&R, etc.? So let's focus on the crypto stocks right now. We have the Clarity Act, right? The Clarity Act's a real big thing right now. They're trying to get it to the finish line, but they've run into some snags. And that has a material impact on all of our crypto stocks, specifically the underlyings Bitcoin and Ethereum as well, XRP. It has a material impact on that. So you got to be aware of what's going on, where they're at with trying to get that Clarity Act to the finish line, because I feel like until we have clarity on the Clarity Act, pun intended, I don't think Bitcoin and Ethereum are going anywhere positive. So I stopped looking at the charts. I literally stopped looking at the charts. I don't give a crap about your demand zones and your supply zones and your Fibonacci retracement levels. It doesn't matter to me, because I have been in this game long enough to know with almost 100% certainty that nothing moves the needle like market sentiment, politics, news. Nothing moves the needle like that. We need clarity on the Clarity Act, guys. We're all going to have egg on our face. That's why I'm using the thumbnail of looking like a little beggar on the street because I feel like that's the feeling. That is what's going on with Bitcoin and Ethereum. There's a lot of uncertainty until we get clarity on the Clarity Act. When do I think it could happen? Hopefully within the next 30 to 45 days. So in the meantime, if you're rich in cash, if you've been mindful of your buying power, this is a good time, in my opinion, to be cash grabbing, selling some puts on some what it will ultimately prove to be some really solid underlyings at some pretty attractive prices. So I'm trying to focus on that. I'm trying to focus on that versus like, oh my God, we have thousands and thousands of shares of BM&R and it's just not moving. I'm thankful for all the covered call premiums that are coming through the door because I'm not selling any cash secured puts over there or short puts aside from the ones that are already in place for BM&U. And I'm just grateful that we're at least ringing the cash register with the covered call premium. And the premium is still pretty substantial. And on BM&U, we're not having to sell below our average cost. On BM&R, we're having to agree to sell the shares at 40 when they're owned at 44. But that's not that problematic in the larger scheme of things. So all in all, I do feel like there is a path to manufacturing the win. And for that, I'm truly, truly grateful that we haven't experienced, max pain. Because I feel like what would be max pain for BM&R? Probably $20. What could be max pain on strategy? I don't know, maybe 140, 130? Because that would probably put Bitcoin under 80,000. I feel like that could be max pain. Could be worse, right? These types of stocks, they can go a lot higher than you think, and they can go a lot lower than you think, and that's why people love them, because of that volatility. For premium sellers, like myself, we thrive on the volatility. Volatility equals opportunity. We all know that when we sell options, volatility creates opportunity, because when there's a high V environment, you can what? Sell some puts and calls, and then you can play for a volatility contraction. You don't even need the price to go in your favor. It's kind of crazy. It almost feels like the cheat code whenever you have a high IV environment, provided that you've been mindful of your buying power usage. So that's the second metric that I look at when I open up portfolios on a daily basis. And for those of y'all that are managing 3 or 4 accounts, this is going to be a lot more relatable for you. Or for those of you that are just minding your own little business, right? Your own little hamburger stand. You've got to be mindful of your buying power percentage, guys. That is the metric for me. That is the metric for me, is the buying power usage percentage. So across the board, I'm looking at 49.5. I'm looking at 58.1. I'm looking at 61.3, 62.3, 58.1, 59.1, 61.2, 59.6. And in the account that's all in, it's at 95.2. 95.3%, which is obviously owning the 9,000 shares of BM&U. Why? Because it's a moonshot play. I'm playing for BM&U to get back over 10 or 11 bucks. We look up, boom. Hey, babe, got the little account back up to 100 grand. She'll probably high five me. That's what I'm playing for, right? That's what I'm playing for. So I positioned the portfolio accordingly. So now let's go through these. Let me check in with you guys first, and then I'll switch over to the website. That way I can get things a little bit bigger. Let me check in with you guys here for a little bit, and then we'll do a little bit more thorough of a portfolio update across the board, featuring a couple of key positions. We don't have to drag it out too much. And then after that, looking for a trade, specifically UNH. Let's see what's going on with UNH. Let's see if you guys can contribute. How bad were the earnings? How bad was the guidance? Because earnings tell you what happened. That's a lagging indicator. Earnings per share it just tells me whether or not they did what they set out to do, but you have to cross-reference it with what they told you they were going to do. So to me, the most important metric in the stock market when it comes to earnings, because the stock market historically is a forward-looking mechanism about 6 to 12 months in advance, is guidance. If there's just one metric that I could hear, one news bulletin that I could hear from every earnings report, it wouldn't be whether or not they beat, it would be what are they guiding for? Because that's what the stock market, that's what Mr. Market is going to start pricing in. And it typically starts pricing it in 6 to 12 months in advance. That's why a lot of hedge funds refer to the stock market as the world's largest casino, because we're always betting on the come, kind of like a crap table. We're always betting on the come. So let's talk about it. Let's see where we're at. Let's see where we're at. What's going on, Louis? What's going on, JW the Elder? Angel, short interest on SoFi close 10%. Noto better come pounding the table and don't sandbag guidance, or he can say goodbye to the 25 PSUs. He's already locked in the 25 PSU though, because it held the line for over 90 days. So I don't think they can take that money back. I'd rely on the Tevises and the Tanners of the world. We obviously don't have access to Chris Hager anymore because he works for SoFi now. So he wouldn't be able to give us that information. Maybe he could, I'm not sure. But I would rely on them to see if his performance stock unit has already been locked in. It is my understanding that it is, but I don't want to misinform you guys. Maybe we could rely on ChatGPT. Maybe we could rely on Grok. I'm not sure. So I think that the one thing that I've learned in my 50 years in this world is there's too many ways to source whether or not you're saying something that's accurate or not. So I'd rather just say, I don't know. But I think if I had to place a wager, I think that he's already locked in the $25 PSUs and however millions is attached to that. But I could be wrong. Often I am. Appreciate you, Ruben. Appreciate you. Truly sad Trump supporters can't condemn those actions. I'm telling you, man, it's crazy. It's crazy all the way around on both sides of the fence. Man, forget about politics. Let's just talk about humanity. I think that we all can agree that the most precious thing in the world is a human life. Like by far and away, God created the heavens and the earth and all that stuff, right? If you read your Bible, we all went to Sunday school. Most of us did anyway. But the most precious creation that God has under his belt, right, is man, man and woman. That's it. Everything else is below them. We have dominion over the entire world. Humans have dominion over the entire world, guys. And I don't know what the heck's going on, man. This isn't CNN. This isn't Fox News. I don't know how to talk about the world and solve all the problems in 5 minutes, right? But what I do know is nothing is more precious than another human life or your life, right? And I just feel like if people could get back to that, I think there's still world. TJ for president, I think the world could be a better place. And we just woke up one day and decided to love each other again, man. Just like love your neighbor, right? We only have 2 commandments as Christians now. Like we don't even have 10 anymore because we're under a new covenant. What are the 2 commandments? Love your God with all your heart, mind, and soul, and love your neighbor as yourself. I feel like we're falling short on those by a long shot. And hopefully we can get on track, man. Hopefully we can get on track. You're going to spend your life doing that? Doing what? I'm not sure doing what. Sounds rough. Hello there. Makes sense. Thoughts on UNH? Definitely want to pull that up here in a second because that is definitely, I know it fell bad. So I'm going to see if I can pull up some information here and see what's going on with UNH. See if there's an opportunity there. Let's see if there's legitimately an opportunity there. Where should someone start who wants to learn how to trade options? I think it depends on whether or not you want to learn how to sell options or whether or not you want to learn how to buy options. If you want to learn how to buy options, I don't think that I'm an optimal channel for that. And I don't really know who is because I don't follow people that just buy options because I feel like that's a very, very difficult way to make consistent money in the stock market. If you want to learn how to sell options, I would, objectively, or I say subjectively, I would put myself in the top 5 or top 10 of places where you can learn how to sell options. There's a lot of good sources out there, guys. I don't want to name drop anybody because you always forget somebody and people get offended. But there's a lot of good sources out there. Tasty Trade has really, really good tutorials on selling options. They are like the premium selling capital of the world over there. So I would always direct them to an amazing library of Tasty Trade. I feel like over 50% of my knowledge has come from watching those videos. So that would probably be a good place to start. I put out a couple of seminars on this channel. So if you just type in Wheeler Seminar, Super Saturday, Super Sunday, something like that, I've got like 3 or 4 of those seminars where I go over slideshows and I go over all the ins and outs of selling options. Thoughts on Micron stock? Keeps going up. My calls are underwater. I just don't know enough about Micron, but it definitely caught a bid. It definitely caught a bid, and I'm just not sure. I'm not able to speak on that one. I'm sorry. Dylan, TJ, take a look at Bloom Energy solely for a cash grab. Premiums are juicy. We can definitely pull it up here in a second. A Galaxy Loop is saying they bought a timely leap on BM&R a couple of days ago, $25 strike, January. I like that. January the 27th. This is a good trade, guys, in my opinion. January the 27th, expiration paid $12.01. So you got a break even of 37.12, 37.10. Almost a third of the price of buying shares, break even 37. We'll run the poor man campaign. Thoughts here. I like it. I would make sure that your calls are over 37. Premiums are too low on UNH. Not worth it. We do have portfolio margin, so that changes the game a little bit. Invest with Jeremy. So I would agree with you that if this was just strictly for a cash secured put, unless you're going to be willing to sell pretty close to at the money, the premiums are a little lackluster. They're definitely here. They're definitely a little bit lackluster. But because we're able to utilize portfolio margin and not simply regulation T, it becomes a lot more appealing. Appreciate your word. We here, brother. Catching up now. Hope all is well. We are doing well today. Appreciate you. Hey, TJ, have you looked at Path at all? Whenever I was doing the segment with the mid last year, I dabbled with UiPath and I chickened out. I ended up losing like $5,000 or $10,000 on that trade, and I haven't looked at it ever since. To be honest with you, unfortunately, the majority didn't vote for that, TJ. So that's the issue, man. The issue is it's rough right now, man. I think we just need a lot of prayer, a lot of healing, a lot of love, a lot of understanding, get back to the basics of humanity. And hopefully that would, help out. Probably easier said than done because there's so many people angry and probably rightfully so, right? Just started selling options and puts. At what account size did you really start to feel the momentum kick in at Snowball? I would say the magic starts at around 100,000. Um, as I've traded so many portfolios now across over the years, right? Probably like over 15 portfolios now. I would say that the magic number to where you feel like you legit have a money printer is when the account size is over $250,000. It starts feeling like it's so easy to make money, like you lose perspective. Like you lose perspective because when I was in the oil field grinding, $1,000 was like, my God, I got to go work 3 days for $1,000, right? And I got to bust my butt, 12 and a half hours a day, counting the pre-tower meeting of 30 minutes. And it was roughly about 3 days for me to gross $1,000. Really 2 days, but 3 days when I'm counting health insurance, taxes, child support, all that stuff. So in my world, it was about 2.5, 3 days to gross $1,000. Now I'm like with 250 grand, you go sell options. It's really easy to make $1,000. Now you're like, I could go find a $5,000 bill sitting in the middle of the street with like a 90, 85, 90% chance of success. So, I would say 100,000 you're cooking, with 250,000 you're cooking with gas. Where are we here? You buy right deep in the money calls. I don't typically buy deep in the money calls. That's like whenever you're going to do the poor man cover call strategy, that is something that people utilize. I have utilized it in the past. I'm now trying to coin the phrase, because that's the poor man cover call. So I'm trying to coin the rich man cover call. Instead of buying the deep in the money call, I start the process by selling the out of the money call and generating premiums. And then with those premiums, selling shorter dated puts and calls. So ultimately, I want to run like a short strangle on top of a backstop leap put. And I'm calling it the rich man covered call. I just feel like it's the ultimate. I just feel like it's just the ultimate strategy. My GLW cover calls got blown up today, 100 for April 17th. So I've got time, I guess. Yeah, sometimes we have moves that go so quickly against us. You just need to like take a deep breath, look at the math, see where you're at with extrinsic value versus extrinsic value. Make sure that you're not like a real big candidate for early assignment or anything like that. And then just let the math guide you. Try to stay out of your emotions. Try to stay as logical as possible and let the math guide you. Thanks. I'm looking at it like a SoFi, in my opinion, profitable now and no debt. That's fair. That's fair. Oscar, 1250 puts, cash grab. Could work. Could work. We got to dig into this Medicare thing again. This is where the politics, man. This is the thing that I'm learning over the last couple of years. You got to keep up with what's going on with Congress, right? You got to keep up with what freaking the Donald's tweeting. You got to keep up with what Nancy Pelosi's buying or not buying or selling, because they kind of give you the playbook. They give you the political playbook, if you will. And it took me a long time to come to terms with that. You don't, as my father-in-law taught me, you don't fight with policymakers. You don't fight with policymakers. It's a battle that's very expensive to fight, and it's a war that you're not likely to win. So you find out what the policymakers are trying to do, and you align yourself accordingly so you can profit off of that situation. Whether you agree with policies or not, it's our job in the stock market to try to profit off of the chaos that's going on, right? Because we can make no mistake about it. It's chaotic. Right now, the world is very chaotic, but that creates volatility. So theoretically, the VIX should climb up a little bit, and that could produce more profitable cash selling, short put, short call, or cash secure put cover call opportunities, premium selling opportunities for us. So we should welcome this type of environment. So what I like to do now is I would like to see what's going on with United Health. Let's see if we could do that. So the first thing I always like to do, oh man, this thing bounced already, didn't it? Wasn't it like two or no? Let me look. First thing I like to do is get to the right chart. The first thing I need to do is not do that. I don't think showing that is good. Hold on one second. Hold on one second, guys. Let me see if I can log on without divulging passwords. One second. What is going on here? Why is this not working? Bear with me, guys. I'm trying to do something in the background here. Okay. I think we're good. I think we are good. A little bit. Okay. I think we're ready. So now I can go over here, and probably go here or go back this way and go this way, and we should be there. Trying to get a little bit better at sharing these screens more effectively. Okay, so the first thing that I like to do is I like to go to the charts. And I like to type in the stock that I actually want to look at. So the very, very first thing that I like to do when I take on a new ticker, I feel like I've never really gone through this whole process with you guys. But the first two things that I do is look at the chart. The second thing that I do is pull up the options chain to see what kind of premium is there, what kind of capital requirement is going to be involved. Because before I go and start researching a bunch of crap about this company, I want to see whether or not the juice is worth the squeeze. Because if the juice isn't worth the squeeze, why am I going to bother squeezing it? So I look at this. Chart. It's on a daily. So I'm going to see if I can do weeklies to have more data here. Give me a second. Okay. So these are weekly candles, right? These are weekly candles. And now I'm just going to scroll back. When in doubt, zoom out. You want to get a real clear picture of what's going on with the company. Just zoom out. So we have 2005 to 2015, pretty flat, slightly up and to the right, but for the most part, pretty flat. And then it seems around somewhere between 2014, 2016, United Health caught a bid. Something had to happen with this company. They put some respect on its name, and it went up quite a bit from 80 all the way to the beginning or to the end of 24. It was at 632. So November the 11th of 24, so a little over a year ago, this thing was at all-time highs. I don't know if there was split adjustments. I don't know what's going on. The chart doesn't tell me all those details. But what it does tell me is that it went up and to the right. There was some drawdowns along the way. And then there was some consolidation here from like 22 to 24, some chop. And then it pushed to all-time highs November the 11th, 2024, according to this chart. And then if you look at it, you can make a case for this looking like a quasi double top. And double tops are historically no bueno for the stock price. And that doesn't really doesn't look real clean as like a double top, if you will. Like there's all these people that are going to say head and shoulders and all this other cup and handle and bull flags and bear flags and all this other shit. What I'm telling you is that it peaked on November the 11th of 2024, regardless of the chart pattern. Whether you want to sit there and draw flags and all this other shit, however you want to connect the dots isn't going to change the facts. The facts are this thing was trading at $632, and then something happened. And it had to happen fundamentally that it dipped in December. Something happened and it went down. It was like, oh no, here we go. Oh no, here we go. Bunch of FUD. I don't know exactly what was going on. I think I have an idea, but I'm not for sure. This is where I'm going to need you guys in the chat to help me out, because these charts tell a story. They tell a story, and it's usually very closely tied to the fundamentals. It just is. So if you overlay the fundamentals to this crazy price action on this chart, I bet this is around the time, this huge ass red candle right there, I'd be willing to bet that that's around the time that United Health and fraud were said in the same sentence. United Health and an investigation from the Department of Justice or something like that were said in the same sentence or the same speech. And that was probably the fall from grace that United Health has experienced. And it was bad with a capital BADD. It was badly. It was bigly badly, it's horrible. And then it finally found a bottom in July. And it's trading around 236. And this is around the time that I was introduced to this stock last year, and we started selling some puts. We ran a couple of strangles. We made some money, well over 6 figures on United Health. So it was good. In fact, if I pull it up over here, it'll probably tell you. I don't know. It won't tell you order change, but I wonder if it tells you loss, close, activity. I wonder if it won't tell me any of the stuff that we did with this thing. I guess I can't find that. I don't know. We made money with this stock last year. I don't know if I can find it here. Maybe on the other side, I can try to find it. I'm just not able to work it over here. But we made money with this particular stock. And I don't know how I can even close this. Now, this is annoying. How can I close this? Okay, there we go. So it fell from grace. It found a bottom. It started working its way back up. It came back down, started working its way back up, and then boom, more news, no bueno. And what was it? Something with Medicare. Because I saw a headline, didn't really catch my eye. And then this morning, what? Earnings. I don't know much about the earnings, but I'm pretty sure they weren't good. And I'm pretty sure the guidance probably didn't come in. It wasn't an appealing story. So now, after I look at that, the first thing, the next thing that I do is I decide, if I look from the very top, from when it fell from grace on November the 11th, that's a pretty serious downward trend. Very vicious, very steep. It's like that building that Alex Honnold climbed, the Taipei 101. And it's trying to make its way back up. And then boom, another blow. It reminds me of SoFi. SoFi's trying to climb, take away student loans. SoFi's trying to climb, we're going to raise interest rates. SoFi's going to climb, recession. SoFi's going to climb, like there's always something. There's always a headwind, if you will. So I feel like United Health has dealt with 2 very, very serious health headwinds. So fundamentally, that changes the story. So now we got to figure out how bad are the headwinds, and is there an opportunity here? But before I do all that, because I know that we're going to end up here, so I kind of like to start here. So I go to a 31-day, I go to the closest thing to 30 days. Why? Because it's easier to calculate the rate of return for the year when I annualize it. So then I go and I look in the 15 to 20 delta range for a cash grab, or 10 to 20 delta range. I usually look at the first standard deviation. So in this case, it's going to be between 250 and 255. So I feel like 250 feels like a nice round number. Notice I haven't taken into account price to earnings. Notice I haven't taken into account price to sales. I don't even know what the moving averages are. Nothing of the sort yet. This is just a preliminary trade idea right now. So whenever I'm doing a cash grab, even, this is how it all looks. And then I go and see, based on how bad the fundamentals are or aren't, where the moving average is at, where's the Fibonacci's, what's the RSI look like, the MACD, the stochastic, the parabolic, or whatever you call it, the PSAR. That's a real good reversal indicator. Before I start looking at all of those things and really start digging into all of those things, I feel like at the end of the day, it's all going to lead me back to here. So I try to go there first to see whether or not the juice is even going to be worth the squeeze. Because if the juice isn't going to even be worth the squeeze, I just saved myself a hell of a lot of time. A hell of a lot of time. Because it doesn't matter how good the fundamentals are or aren't. It doesn't matter how the chart looks. At the end of the day, if I want to enter into this position by selling a put, I have to be getting paid a fair amount of money for the capital that we're tying up for the risk that we were taking on. Because I think we can all agree this just started dipping yesterday after hours. So we already know that it's a falling knife. So a lot of seasoned pros, they implement what's called the 3-day rule. Let the stock chill out for 3 days and see if it can find its footing. So let's just see what that looks like. And let's just see what, 50 contracts would look like. And we'd be like right in the middle. Review and send. Get paid $7,700. It reduces the buying power by $76,000. It's 10%. It's not bad. So now there's something else that I want to consider. What if I do some research and I feel like this thing's going to take time to play out? There's a lot of uncertainty. There's going to be a lot of fear, uncertainty, and doubt. I don't know that I'm comfortable risking $225,000 50 times over, right? Because that's what the agreement is. So $25,000 50 times over, $1.25 million. I don't know if I'm comfortable committing us to buy $1.25 million worth of United Health without getting a lot more questions answered. But what if I could sell something a lot farther out of the money, out in time, and let the thesis kind of play out? So what if I did something like over here in January, and instead of 250, what if I could go somewhere in the 210 range? It's a 16 delta. So now this thing has to dip quite a bit from where it's at right now. Like, I'm just eyeballing it. 10% would be $28. It's $6. So it's got to dip like 20%. 25% to hit our strike price. More like 20%. What would they pay me for that? It might be easier for me to make that decision right now versus making a decision at $250 when I'm only going to get paid $7,000 for potentially having to pony up $1.25 million worth of stock. So you can see how the juice really isn't worth the squeeze. So let's see what a potential backstop trade would look like to see if there's a play there. Now it becomes a little bit more interesting. Now it becomes a little bit more interesting because we could collect $51,000 and it reduces our buying power by only $66,000. So it's like a not quite a one-to-one return, but just eyeballing it annualized, your cash on cash return is about 90%, 85%. Much more compelling for a couple of reasons. It's utilizing less buying power. You're collecting more premium up front, and you're agreeing to buy the underlying at a much more attractive price without having to learn too much about the stock, because things wouldn't really get serious unless what? United Health dipped to like 230, 220. Because then at that point, it's like, oh shit, I could potentially be on the hook for these things. So that's why I'm starting to utilize backstop trades as better cash grabbing instruments, because I can make that decision a lot faster because my margin of safety is a lot higher. And now we also look at what's the notional value, the cash collateral component. Now we look at 21,000 times 50. Now, instead of agreeing to buy United Health for 1.25 million, we're now agreeing to buy it for $1,050,000. It's a big difference. So you're getting paid more premiums. You're tying up less capital requirement today. The notional value is also less by 200 grand. This, in my opinion, is just a much better trade all the way around. And instead of creating stress for $7,000, you might potentially create stress down the road. Right now, it's not going to cause stress, but you at least got $50,000. So to me, this is just a much better trade all the way around. So those are the things that I look at. Then I start digging to see how bad is the fundamental story, because it didn't just drop whatever it dropped, 50, 60, 70 points, just because that didn't happen. So eyeballing the potential trade before doing the homework, the only trade that's making any dollars and cents in my mind right now is to sell the leap put and then potentially run some short dated calls against the stock. So Mr. Premium's over here saying the poor man covered call. I'm going to say what's more appealing for me is the rich man covered call. Is where I'll sell the leap put at a price where I feel like it might become no-brainer. I feel like 210 feels no-brainer-ish on United Health, and then I'll sell some short-dated naked calls on top of it and create a this and that situation where it's mutually exclusive, and eventually I end up on a strangle where I'm at like 210 and maybe 510. But I run the short call over and over and over again, and I'm just doing homework. If it turns out that the trade feels a lot better, maybe instead of 50 contracts, it ends up being 100 contracts. It ends up being 200 contracts, 300 contracts, 400 contracts at 210. And then now I'm kind of hoping, wouldn't it be cool if United Health dipped to like 220 and September, October, November rolls around, and now I can put this trade on again, and I can roll it from January to the following January and go from 210 to like 200, 190, and it becomes another PayPal scenario. And then there's this one, sell the leap and just outright buy shares if one is bullish, or you can do what's called the synthetic long, where you can sell the leaps and use those premiums to buy leaps. There's so many ways to skin the cat, guys. And I'm trying, I appreciate Mr. Premium chiming in and giving you guys different perspective. But I feel if I could just get a little bit of homework under my belt, if you guys could chime in, I'm looking forward to reading the comments here in a little bit. I'm going to see if I can pull it up on stockanalysis.com, Yahoo Finance, the things that I, subscribe to here. And seeing if I could potentially do a backstop trade on United Health at 210, because that seems like a really cool cash grab, $50,000. And if I have to babysit that trade for 2 or 3 years, and I keep making $50,000 and $100,000 if I never add to it, and then down the road, after a couple of rolls, I take ownership at like 180, 170. How are you going to lose money? I mean, because last time I checked, United Health is still pretty good. Pretty good company, I'm sure. But we'll find out. Let me see what you guys have to say about it, and then we'll go from there. Uh, for a rich man's covered call, you're selling a call without owning a share. Correct. Correct. Because I have the money to buy the shares. I just did it with Enphase. But I'm not trying to buy the shares until I absolutely have to buy the shares. Hey, TJ, I love being down 6% on the whole portfolio because of the health sector. I think you're going to be okay, man. I think you're going to be okay. I've seen your portfolio. You're going to be fine. Stock, man. A lot of people about to be raw dogging Medicare with aspirin and NyQuil. The chart on you is so ugly, I don't want to see it. Everyone seems to be focusing on United Health, a Buffett play. What about MOH, smaller company? I think a lot more upside for small invest thoughts. We can definitely look at it. Premiums tripled overnight and massive layoffs. Healthy folks are choosing between eating and a roof over their heads or health insurance. Pretty simple. Yes, United Health reminds me of SoFi too. Piper Sandler. Jessica Ted discussing United Health now on CNBC, The Exchange. Absolutely. So let's see if I can find some info on United Health specifically. Stockman analysis, UNH. Okay, let's see if we can find something here. So let me get over here. Let's go over here. Hopefully that shows up for you guys. I'm waiting on the TV over here to let me know that I'm sharing the right stuff. And here we go. We got United Health. This is stock analysis. I subscribe to this thing. It's a few bucks a month, 20, 30 bucks a month, whatever it is. I feel like they give you really, really good information over here. I'm a real big fan of stock analysis. They have a free version. I choose to pay for it. So here's the thing, down 70 bucks from the after hours yesterday, right? So I'm over here contemplating selling a put at 210. It's showing you that it could drop 70 points in one day. Just saying. So that's why there's no such thing as free money in the stock market. Some things just feel like easier money. So let's see what's going on. Obviously, we know about United Health, right? It operates as a healthcare company in the United States and internationally. The company operates through 4 segments: United Healthcare, Optum Health, Optum Insight, and Optum RX. The United Healthcare segment offers consumer-oriented health benefit plans and services for national employers, public sector employers, mid-sized employers, small businesses, etc. They got 400,000 employees. Their IPO date was 1984. So now let's see if we can find something. United Health, I might add on this massive overreaction. Seeking Alpha. Let's see what they have to say. So United Health experienced a 20% single day drop, but I view this as a major overreaction given its strong fundamentals. United Health 2026 guidance signals a shift from growth to margin recovery, with adjusted earnings per share targeted at $17.75 and operating margin of 5.5%. Management is exiting unprofitable Medicaid states and focusing on higher margin business, accepting a 2% revenue decline for improved profitability. So what they're basically saying is we're willing to bring less money through the door, but we're going to boost our margins. So sometimes less is more. Despite political and reimbursement headwinds, United Health generates robust cash flow, supports buybacks and dividends, and trades at an attractive forward PE of 16 times. Not bad. This person's been covering United Health for a while now. And if you followed my previous articles, you know I've been buying this stock myself. Today's one of those days when my portfolio definitely doesn't make me smile, all thanks to this stock. Since my first buy rating, the stock is down 5%, while the S&P is up about 8%. This is not a nice picture, especially together with a 20% single day drop today that has wiped out over 50 billion in market value in almost no time. Looking at the Q4 report, I'll be the first to admit that it isn't great. So fundamentally, already telling you, not great. Even though I see investors discussing that the results are okay, I would disagree. I can see why the stock went down on this news, but losing such a massive amount of market cap for a powerhouse like United Health looks like a major overreaction to me, and now I'll explain why. The Q4 numbers. Besides looking at the misses or beats or the guidance, I think it will be smart to discuss what they mean. The revenue of 113 billion is lower by 520 million than what was expected from United Health heading into earnings. That's crazy. That's a huge miss. But it still represents a very healthy 12.3% year-over-year growth. For a company of this scale to grow double digits is very impressive, regardless of what was expected on this company to deliver. Adjusted earnings per share reached $2.11, which was actually a slight beat or in line, depending on which consensus you follow. But the shocker was the GAAP earnings per share was only 1 penny. This was a classic kitchen sink quarter, and it feels odd to me that the market doesn't seem to recognize it. Management took a massive 1.6 billion post-tax charge, about $1.78 per share, to cover restructuring, divestitures of non-core assets like Brazil. This is whenever you divest from a company, you sell out of your position, and the cost of that cyber attack. But it is stated in the release that the impact had been largely non-cash. While it still affects shareholders, the impacts of this specific charge is minimal. So it shows it to you there. I pointed out in previous articles that Optum RX could be a potential weak point for the company, but in this report, it performed well, which I personally did not expect to see. So that part's good. And then here it gives you some little metrics here. Most importantly for us as investors, the cash generation is incredible. They got 19.7 billion in cash flow from operations for the year. That is roughly 1.5 times their net income, and it gives them a massive safety net for dividends and buybacks, even if the market reacts like this. So I like companies that mathematically cannot go out of business. This company mathematically cannot go out of business probably over the next 10 years easily. It could survive. So the real reason for the 20% plunge is not really Q4. It's a mix of different negative catalysts, which were powered by the fact that investors don't tend to like the industry overall. First, the 2026 revenue guidance of greater than 439 billion implies a 2% annual decline. So you're going to have negative CAGR. And this is part I noticed and really did not like to see. The company explains it as a deliberate move to exit unprofitable Medicaid states and drop nearly 1.4 million Medicare Advantage programs who are no longer profitable under current funding. But I can relate to the investors who are extra jumpy after the major drop and all the headwinds in 2025. Another thing that sent all of the insurers flying down was the CMS proposal. This is what I had seen yesterday, but I didn't read into it. The government suggested a tiny 0.09% increase when analysts were hoping for 4 to 6%. This is an issue for all stocks in the industry. So this is why today we see Humana, which is down 20%, CVS Health down slightly less. It is a political headwind. What do we talk about? Politics moving the market. But United Health has the scale to navigate this better than anyone else. So if not for the earnings, United Health would be down anyway, but of course not as much as the smaller peers. This company is already pricing a 10% medical cost trend for 2026 and targeting $1 billion in cost savings through AI and automation. So while the news isn't favorable, once again, it's not a catastrophe. Again, this is someone who is hurting because their portfolio is taking a beating, but ultimately the long-term thesis hasn't changed for them. But I think this is where time horizon is a big component to how you manage your hamburger stand. So this is interesting for me. Conclusion. Do I think the stock is going back to 600 next week? Definitely not. And even when buying the stock before, I said my target price was at about 400 if nothing changes dramatically. We have lots of noise to clear out. The news isn't favorable, and 2026 is going to be a year of transition. But at a price below 300, the stock looks attractive, even given the headwinds. After all, they print cash, they buy back shares, and pay a nice dividend for year waiting. We are looking at a forward P of roughly 16 times for the undisputed leader in healthcare. Historically, that's about where the market likes to trade according to the Buffett indicator. When I bought this stock, I said I would be waiting for at least a year. Since then, only a couple of months have passed, so I still have plenty of time for my thesis to play out. Just like the dip we saw in August, I expect a rebound once the market realizes that United Health is fine. So I even consider adding more on this drop, although I would wait a few days to make sure no surprises appear. I'm not suggesting anyone do the same, just sharing my thoughts. Interesting stuff. Interesting stuff. So now the question becomes, do we have enough information to sell these puts at 50, at 210, 50 of these contracts? I don't know. I think that just because I don't think United Health will ever go under 150, because what's that going to do to the P ratio? Put it like at 7 or 8? I think if I sell puts at 210, I could roll a couple of times and get to a level that I just think mathematically is extremely improbable for the stock to get to. I think maybe I can start with 25 puts. Stanley Druckenmiller, invest and investigate. And then see whether or not I add another 25, see whether or not I add another 75. But I do think that this is a worthy candidate for a backstop trade at 210. So I'm going to go ahead and put the trade on. I'm not going to do it at 50 contracts. So I'm going to start off small. I'm going to do 25 contracts. And then I'm going to go do some research. I'm going to go look at the charts in a more serious fashion. I'll invite Uzi. I've got Minesh that gives me charts on a daily basis. And then I'll start really digging into the company to see if this could turn into a 200, 400 strangle as far as contract sizing. Because it did really, really well for us last year. And I felt like I left $500,000 on there because I just stopped playing it. Now it's back to those levels, or not quite, but I mean, these puts would be around levels that I was selling the options at before. So what I want to do now is I want to exit here, and I want to see if I can pull up this side of the portfolio. And I want to see if I can find United Health trade. So let's see if we can find anything with it over here. And there you go right there. We made $206,000 with United Health last year. So now the best chart that I can look at, the best table, the best data set that I can look at is trades that I've already made with the company. Because I'm going to have a nice reference point. Where was I selling the puts? Where was I selling the calls? At what days to expiration, and how much premium was I bringing through the door? Why is that important? Because I'm going to see whether or not I'm getting paid an accurate amount of money, an adequate amount of money, shall I say, for the risk that I'm about to undertake. So let's go through the historical evidence. So we started this around July, and that points to where we were at in the chart, where I started getting interested. And we were running a strangle at 270 and 360. We got paid $980. I'm on the bottom right. On the bottom right. Got paid $980. 5 days later, closed it out for $795. So I just closed the strangle out. Real quick cash grab. Made a couple bucks. Times 100 contracts, though. It's a lot of money. It's 20 grand. Then I did it again. I did 50 contracts at 250 and 400. Got $8. 65 days out. This was 32 days out. And then I did more. 25, 250 and 400. 50 more contracts. Got $888 a contract. Then I did more. Got 923. Then I did more. Got 894. Then I closed all of them out for 679. So we made 50 grand. Over here, we made 18,000. Over here, we made 50 grand. And then I was like, well, okay, then it tanks some more. So I was like, oh shit, this is getting interesting. So I sold 100 puts, 44 days out at 230. Then I sold 150 puts at 230 strike, 43 days out. And I bought to close for 188. Boom, another 114,000. It's all there. You don't need a wheel tracker anymore because Stacey Trade knows how to keep books. Robinhood should take a page out of that book. You know, like, give us the data. Why the hell do we need to be tracking this stuff? We got to focus on other stuff. We don't need to be accountants here. Then I did it again. Sold the 240s for 214. Bought them back for 182. So made another 3,200. And then you'll see 6,500. 13,000 adds up to $206,000. And I gave myself, when I graded this trade at the end of the year, I gave myself a C+. That was a lot more money I could have made, but I was focused on other shiny objects when this one was ready to print money for me. So I'm like, interesting. 210 is lower than any strike price I've ever had on it. On the put side. So this is the way that I'm going to play it. That is all the evidence I need. I don't need to do anything else because I had already done quite a bit of homework when I started with it last year. So now I'm just going to go verify a little bit. So what I'm going to do now is I'm going to sell this backstop trade over here at 210. And I'm going to start with 50 contracts now. And I'm going to try to get it filled right there in the middle. So I'm going to bring in 51,900. It's going to reduce my buying power by 66,000. And we're going to send it. And we're going to wait. And then now I'm going to start looking at the 31-day cycle. And if United Health starts to bounce a little bit, then I'm going to run the Rich Man Covered Call campaign. And I'm going to look to sell somewhere between 1 and 2 standard deviations away in that 10 to 15 delta range. So probably over here in the 330 range or 335 range, I'm going to start looking to sell 50 contracts over here in covered calls and naked calls, sorry. And that's going to bring in another $8,000. So I'm like, I'm going to go get the 50 and then I'm going to try to get another $8,000 and I'm going to try to do that 8, 9, 10 months in a row. That's another 80 grand plus the 50. I'm going to try to see if I can manufacture another $250,000 payday from now to the end of the year on United Health. So I'm going to give it time to cook. If not, I'll go tick it down a little bit and lock it in. I may even consider selling more contracts, but the reason I can't do that right now is because the buying power usage is a little bit high now. It's at 61.4%. Why? Because we have stuff that's expiring, right? We have like this this PayPal naked call that's expiring. We're already up 51% on that. But the issue is the portfolio is getting hammered a little bit on PayPal because PayPal's not performing. And that is a huge backstop trade. Fortunately, it's 325 days out in the distance. BMNU is performing a little bit. That helps. And SoFi is not performing. And we've got 500 puts expiring in 23 days at $23. So if SoFi was going this way, that would help the buying power. But since it's coming this way, It's not helping the buying power. What is helping a little bit is the naked calls at 36, but the puts are getting hammered. Same thing on BM&R. It helps that the shares are up a little bit today. That helps the portfolio. In phase, it helps that the shares are up a little bit. And we have the calls expiring in 31 days. That part's good. The backstop trade's working on in phase. NVIDIA looks like it's pretty flat for the day as far as for the strangles. Riot is performing well today, so that helps. Palantir is another bit of an issue here because the puts keep getting challenged more and more and more. Fortunately, I have more naked calls than puts, so the position is still, relatively speaking, delta neutral. Strategy, not helping today. It's just not helping today, right? And this is a huge position, 142 days out. So these are the things that are hurting the buying power right now in the portfolio. Apple is doing pretty good today. Marathon is doing okay today. Google is pretty flat today, so we're good. We're very comfortable there. Amazon is really helping the portfolio today. These backstop trades that I recently put on, I wish I would put more contracts on. This trade's really working. And when this trade jumped off the page at me, I was like, dude, you should go heavier and go trim some of these other positions. But I didn't do it. But I am glad that I did the 200 and then I did the 180. I wanted to do the 160, but now the juice is like I need a little bit of a pullback to be able to sell more puts. And those are the gimmies and the gotchas, right? It always feels like you should have sold more whenever the price is going in your favor. And it always feels like you should have sold less when the price isn't going in your favor. That's just the nature of the beast. And then also what's not working is ASST. It's just not working, right? We've got 250,000 shares at $1.37. Now we damn near need a double. We need a double just to get back to even. It's crazy. It's crazy. So for those reasons, I'm out. No, for those reasons, I can't increase the amount of contracts right now. And I need to go over here. What do I need to do to get this damn thing to fill? You see, we're just losing it. We're losing it all the way around. God damn it. Oh, that sucks, man. I should have just taken it down like $5. I could have made an extra, I don't know, probably like $5,000. That's annoying. That is really annoying. So anyway, it is what it is. That's annoying. I feel like there was more money to be had there. I could have just freaking ticked it down. And that's when you're dealing with this kind of volume, it feels really, really annoying. So now I'm actually low-key hoping that United Health dips to like 275 because then I can put another 50 contracts on and I can get more premiums and then it can do what it's going to do. So 16 Delta, guys, I feel like I don't have to do anything. If it shoots up, I'm going to start selling naked calls. If it gaps down even more, then I'm going to look to sell more puts. So that's where I'm at. That's where I'm at with United Health. That's where we landed. And now I have absolute maximum amount of positions, which is 15. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. There is no world where I ever feel like I could manage more than 15 positions at one time in one portfolio. And what I mean by 15 tickers, I just feel like it just becomes way too much. It just becomes overwhelming, all of that stuff. I'm maxed out. I am maxed out. And I'm looking at BM&U. I'm looking at BM&R. I'm looking at Riot. I'm looking at MSTR. I'm looking at Marathon. I'm looking at ASST. All of those are in the crypto space. So I'm going to eventually look by the end of the year to get rid of at least 2, maybe 3 of those crypto plays and transition into something else that I've already been in before. For instance, TSLL or Tesla. On a pullback, that is the number one stock that I want to look to build a position in again. But I'm going to have to sacrifice one of the crypto plays to get into that. Other than that, I don't see anything else. I don't see anything else that I want to potentially be a part of. Maybe Clean Spark. Like if I come out unscathed on ASST, maybe I'll be like, okay, that moonshot caused stress and it ultimately didn't work out. Maybe if I could get to break even on ASST, I could see me transitioning that money over to Clean Spark just because the level of trust is a lot higher on Clean Spark. And it's just because of the familiarity is all. It's just because of the familiarity. And it's like, okay, I already have one digital asset treasury in BMNR, another one in MSTR. Do I really need another digital asset treasury? I feel like just playing these crypto miners has been good for me. So kind of stay there. Another one that I potentially see could make it back into the portfolio at some time would be a HIMS, maybe a hood, maybe a hood. So when I look to transition out of some of these crypto plays for more balance in the portfolio, those are the things that I'm going to be looking to do, guys. I want to see if this shows. No, it just doesn't show. Oh, maybe it does if I do this. Yeah, I want to end with this. I want to end with this. That's the portfolio allocation right now. So BMNR is 22.2%, 22.6. BMNU is 12.3. MSTR is 11.5. So that right there is 45% or so. 43%, whatever it is. Almost half. And then over here, I got PayPal backstop trade. Enphase, own shares backstop trade. Apple, strangle. Palantir, super strangle. SoFi, strangle. Amazon, backstop trade that I'm ultimately looking to turn into a strangle. Google, strangle. ASST, own the shares. NVIDIA, strangle. United Health, backstop trade that I ultimately want to turn into a strangle. Marathon, mini backstop trade. Riot, just a cash grab, short put. So I look at like Riot, I look at Marathon, ASST. Those three could be consolidated into like a HIMS or a Hood or Tesla or something like that. Although I think Riot ultimately, because I really loved what they're doing now with the AMD and whatnot. So I ultimately want to maybe try to get Riot up to this 10% level, and BMNU would no longer be there whenever we get whole on this position. I won't see a need to continue to swing trade Hood BMNU. I'm sorry. So that'll be out of there, and maybe Riot steps into that place, or maybe I just keep going heavier on Apple, Palantir, Amazon. We'll see, but it's just about balance. It's about balance. So whenever Apple is 10%, PayPal is 10%, Palantir is 10, Google's 10, Amazon's 10, NVIDIA's 10, SoFi's 10, that's when I'm just going to feel better about everything. And as those increase in value, the BMNR position will come down in value, proportionally speaking, based on the weight of the portfolio. So that's kind of what keeps me up at night as I'm looking at this kind of stuff, and I'm like, okay, gotta get some better balance going on there. I hope y'all got value out of this session today, man. I feel like we got into the weeds a little bit. I appreciate the 98 people rocking with me live here on YouTube, the 891 people rocking with me on X. I appreciate each and every one of you guys. So there's that. Where else are we going? Lots of people are waiting a few days. We did that one already. Past my bed, good trading. Tesla drop 100 points and we'll see number 16. Facts. No, I'll get rid of one. I promise you, I'll get rid of one. But yes, if Tesla drops 100, you know damn well, emergency stream. I'm sorry, SoFi, but I got to do it to you. I'm sorry, Jason Lesson, right? But I got to do it to you. Tesla's my favorite company. It's my favorite stock, but it's just I made a lot of money on TSLL last year, so I'm grateful for that. But I totally misplayed Tesla. I had so many leaps on Tesla that I paper handed, dude. Could have made like about $2 million. And that's the one that pisses me off. Wow, man, that's the one that pisses me off. I need a crystal ball. I need to invest in a crystal ball. Anyway, guys, on another note, I want to leave you all with this. This morning, I weighed 213 pounds. I haven't weighed that little for over 2 years. So 210's next, and then 200. Been trying to get down to 200 for over 2 years, and I want to stay there. I want to stay there for a little while, for like a couple of months to adjust, to get acclimated with being between 200 and 205. And then June, July rolls around, and I want to make a concerted effort to get to 185 pounds. And then I want to go the rest of my adult life 180, 190, because we fluctuate, right? Holidays and whatnot. I feel so much better, man. I feel so much better. I'm looking at it on the screen right now. I can visibly see that my face definitely looks a little bit skinnier, if you will. I'm still chubby. I'm still pleasantly plump, but I feel good. I don't want to do it too quickly because I don't have like a lot of skin sagging or anything like that. I'm trying to do it right. I'm trying to like work out, do a bunch of reps that way, and I have like a lot of loose skin and all that stuff. So I'm just trying to do it right, trying to be hydrated. Like I got this guy, got this guy, got this guy. It's like these two are mine. My wife has this weird thing where she'll drink like half a water and just leave it somewhere in the house, and then she'll go grab another one. And I always finish off her waters or I give it to the dogs whenever I feed them, because it pains me to throw those waters away. She's just, I don't know why she does that. It's like the weirdest thing. I've never seen it. Anyway, I got to run, man. I appreciate you guys. I got a couple of FaceTimes to do. If I don't make any moves, I don't think that there will be a portfolio recap today. If I make any other moves, then it'll be a real quick portfolio recap, 10, 15 minutes. TJ the Wheel Deal signing off. As always, guys, stay blue stock screen. Peace out. God bless you guys.